Hey everybody, welcome to the Market Antithesis, where we ignore all the noise and focus on what really drives the action on Wall Street. Today, we're going to take a deep dive into what's going on with the payment processors. These companies have been historically amazing businesses, but over the past quarter to 6 months, they've been beaten to shreds. So today, I'm going to take you through the step-by-step process of how I'm going to diagnose the price action and what I'm going to do about it. But before we get into that, I just want to let you know that if you want to try to take advantage of any of the information you hear in today's video, please download the free ebook below that it's going to teach you how to generate consistent cash in the stock market. It's 100% free. No risk, all reward. So first, I want to look at Visa. Now look at this stock chart. Right now, it's trading below all moving averages 4 months since earnings in the summer. It's been severely beaten down. Why is that? The business really hasn't changed very much. They're still getting tons of profit on transaction fees, etc. Why is that stock price going down? Similarly, Mastercard over that same period has been beaten down. But over the past, let's say, 10 trading days, it's actually bounced up. So why is that? What makes Mastercard different than Visa? You can see here that Square has a similar chart. It really appreciated over the past, 18 months, but in the past quarter, it's been driven down significantly, almost down 35 to 40%. So why is that happening when all these businesses are making so much money? And finally, PayPal. This stock's been beaten up the most. It had a similar sell-off after its summer earnings report, like the other companies, but after this most recent earnings report, it gapped down significantly here. Why is that? What makes this company different from the others? I think there could be a real opportunity here if we're patient, and specifically in PayPal, because it's been sold off so much. I am thinking about deploying a certain option strategy to ease my way into the stock. So in trying to understand why a stock may be falling, I first step back and look at the macro situation of the business. So a lot of times I'll go to the website and look at what type of services they offer. And specifically with these ones, I want to focus on the business-to-business transactions because that's really where a lot of the money is made, because the businesses that are Visa's customer or Mastercard's customer or Square's customer, or PayPal's customer, they have a ton of money to spend. So there's really more upside and more profit to be had there. So if you look at their business-to-business revenue sources, it looks like they're doing a great job of innovating and keeping up with the times. There's a category for next generation commerce. So that's including crypto solutions, direct solutions, real-time experiences. They're also looking at doing some consulting, analytics, fraud detection. They're really doing a good job of diversifying their revenue streams. This is all in addition to their traditional payment network business that makes so much money, and it's been amazing since they IPO'd in 2008 along with Mastercard. That's the appreciation has been insane. You can go back and look at the IPO stock price, but Visa and Mastercard have been some of the best performers in the market. So to see them get sold off now is kind of a little confusing. Certain macro conditions, I guess, could be impacting that, but overall, these businesses are crushing it. So similarly, let's take a look at Mastercard's website. You can go Mastercard for Business, see what they're doing here. They're servicing large enterprises, small and medium businesses, banks, other public sector things. Public sectors are great customers to have because they have unlimited money to spend. They can literally create their own money. I know a lot of you guys are probably familiar with how much money we're printing. So if we're printing money, then the government can spend on all these companies. So this Mastercard has a ton of fundamental strength. You can also go down and see what they're doing here. This is kind of a reiteration of what we're seeing on the other screen. They're servicing all these different groups. You can see that they've really outlined their goals here, where they want to connect and power an inclusive digital economy. And this is really good because as technology improves, we're really transitioning from the physical world to the digital world. So it's good to see that Mastercard is following that trend and trying to capitalize on that. likely to increase its profit. So again, along with Visa, I don't really see a ton of reasons for this sell-off fundamentally. But we can probably talk about maybe why that's happening and how we can take advantage of it. The next payment processor stock that I want to look at is PayPal. So this company is a little less mature than Visa and Mastercard, but I mean it was trading at something like a $300 billion valuation. So it's a massively profitable company, and it's been beat up. But we can still look here and look at its business to business information. We can see that they have options for enterprises, small medium businesses, similar to the other companies, marketplace platforms. I mean, look at that. This is where the money is made in technology nowadays. I mean, if you look at Facebook, Google, Apple, all these amazing companies are in the marketplace business because they're kind of focusing and sitting in as the middleman and creating revenue by just kind of being a toll taker. They own the marketplace, they own the platform, and they get paid for it. Fundamentals are great here. And one of my favorite parts of PayPal is Venmo. I bought the stock maybe 5 years ago. I had to sell it for certain personal reasons, but Venmo was really the reason why I love PayPal, because it's a way to send money to friends without having to take out cash. I mean, it's so easy when you're out, you have to split a bill or something. Hey, Venmo me. And you can see here, it's become a verb, which historically means that the company is going to do well. If you look at Google, Google is a verb. Airbnb is a verb. Zoom now, we've learned that during the pandemic. Zoom is a verb. So anytime a product or company becomes a verb, it just means that people want to use it and are so comfortable using it. So again, fundamentals extremely strong for PayPal. Sell-off probably overdone, but it could continue. But there are certain ways you can take advantage of it. So we can go into that later in the video. The final payment processing stock that is got sold off. I mean, this is actually one of my favorites because it really has the most growth potential, and it's kind of the youngest. It still has all those features about being a middleman, so it's creating that easy revenue, but it's also getting involved in cryptocurrency more. I know they're building out some sort of cryptocurrency development platform, which is massive because there's a ton of capital going into that space. The upside of being the kind of platform in that business or in that realm is really massive. So as you can see, Square's kind of most famous product, and this is what you see a lot when you go out to eat or when you go to a coffee shop or whatever, is this business POS system where they're able to set up orders. You can use Apple Pay on them, scan, pay with a credit card. So this is where they make a lot of their money in the business transactions. But also, which is what is probably driving a lot of the growth over the past year, is the Cash App. I mean, this is similar to Venmo. It's a little, I guess, more popular with younger generation, the Gen Zs. They love this app. The marketing is amazing for it. And you can purchase crypto on it. That's really what drove a ton of the revenue growth late last year. So, I mean, this is still going to continue to grow. I mean, people love crypto. I don't really see why people are going to stop buying stuff on this app, why they're going to stop saving money. I use it as their bank. I see it's a really good growth opportunity for the company. So fundamentally, Square's doing great too. So why has there been a sell-off in these companies? So let's look at some of these charts specifically so we can try to figure that out. So here's Visa. So when I look at a stock chart, there's a million ways to do it, but I tend to look at moving averages. So here we can see that I have several moving averages, and we're going to see them on all charts. And we have a short-term moving average. So I use the 8, which is like right, it's close to the price currently. And there's a 21-day, a 50-day, a 100, and 200. So those are all kind of indicators about market sentiment. So we can see here that Visa is trading below the 200-day moving average, and that's really not traditionally a good thing. But again, the fundamentals are so strong for this company. Why is it being sold off? Let's see, for Mastercard, how's that doing? So for Mastercard, it's a little different. It did get below the 200-day, but then there was a strong bounce a few trading days ago. It's actually trading differently than Visa. A lot of these payment processors just tend to correlate with each other, but there's something going on with Mastercard. There might be more upside that the market sees in this company. So it's an interesting thing. So PayPal has been really beat up. I don't necessarily know exactly why this is happening and why it's so different, but you can see on the chart that it similarly started getting sold off in the summer after those earnings started going lower than all of its moving averages. And then there was some news about PayPal trying to acquire Pinterest, and the market did not take that well, which I guess makes sense. I mean, if they're going to use some sort of debt to finance it or whatever, you have to take a look at the specifics of the deal. But after that happened, the stock got sold off significantly, and I thought it might kind of bottom out, but after earnings this past week, it really gapped down and got hit. So at this point, it's probably something to start looking at. But again, I don't really tend to try to take a risk on companies that the market just is really not in favor with right now, which is confusing to me because, again, like we just went over, like the fundamentals are fantastic. I mean, Venmo, like I just Venmoed someone the other day. Like people are using these products, so it's rather confusing. Sometimes this just happens. So finally, let's look at Square. It's Square. If you back out a little bit, it's appreciated so much over the past year that this consolidation range here is to be expected. So since the summer, after here where they acquired Afterpay, which is a buy now pay later program or company, which was extremely bullish for the stock. There was a ton of profit taking going into the fourth quarter, into September when the general market was coming down, similar to the other payment processors. And I kind of thought that there might be a bottoming out effect here because, again, the fundamentals are so strong. And we are heading into the fourth quarter, so most of these stocks are going to have great results because of the holiday season. But it's weird because it did get driven below this 200-day, but it seems like it's kind of bottoming out here. So again, Square is probably my favorite play here, just because there is a ton of upside, but we'll probably have to be pretty careful about how you enter the position. So, before I get into maybe how I might play this, I do want to just look at some revenue numbers because we looked at the stock charts, we looked at the qualitative fundamentals, meaning fundamentals without numbers. And I think it's important that we actually look at the quantitative fundamentals because that's a lot of how market prices different stocks. So here we have Visa, and we can just keep it simple. I mean, there's so many different things you can look at, but in the long run, what drives appreciation is going to be top line revenue growth. So we can see here, this is on an annual basis. Revenue has been increasing consistently, and we had this a little bit of a down year in 2020 because of COVID, but that was like a general market situation, so you kind of have to discount that. I guess it probably already impacted the price. I can't really think that is why there's been a sell-off recently. But it's really driven by less traveling, so that should start coming back over the next year or 2 years. So I really don't think that's having a ton of impact here, and we can see that there's been a really strong bounce back in increase. I mean, that's $3 billion, so that's a ton of revenue coming back into the company. And on a quarterly basis, which is more short term here, we can see that it's really been a consistent revenue growth. So again, the fundamentals are fantastic. There's a weird market hiccup going on here. I think over the next couple months, there's going to be a real opportunity here in these safe stocks. I mean, this thing is in the Dow Jones. I mean, it's really, really safe. So let's look at Mastercard. The revenue is very, very similar, but they've actually been doing better than Visa to a certain extent. Here we see this consistent growth. In 2020, they did a little worse. Their revenue declined, but that's consistent. And the revenue that should be coming out in the next year is going to be fantastic too. So I don't know. Part of me is slightly confused here. If we look at PayPal here, I mean, do these revenues really signify that massive sell-off we've seen? I mean, I really don't know. I really wouldn't think they would, but sometimes the market knows something we don't. or maybe we know more than that. That's the best. That's the most interesting thing about this. So revenue has increased from 13 billion to 15 billion to 17 billion to 21 billion. So I think this big increase has probably been priced in. So we'll have to see, what happens. It's going to increase, but I guess the growth rate decrease, which is something the market, I guess, doesn't like. But that's really a short-term change. And finally, let's look at Square. I mean, this revenue growth is absolutely insane. I mean, if you look at between 2019 and 2020, it's like they almost doubled their revenue. So a lot of that has been priced in. So there's definitely some profit taking going on. But if we look at the quarterly results, I mean, those are growing amazingly too. So it's an interesting situation. I do think that there's a ton of opportunity here to catch these stocks at bottoms and ride them up. The only thing is that it can be kind of risky to try to buy stocks when they are going down. So here, I just want to hint at a strategy that we can use to try to enter these stocks. So if you have a certain understanding about how to set up a spread trade, so using options, you can ease your way into these positions without taking a ton of risk. So I mentioned in the beginning of the video that I have a free ebook that's going to teach you how to generate consistent income in the stock market. So the way you do that is a fairly simple options trade. There's a next level of sophistication that uses spreads, and that's a great way to try to enter any one of these payment processing stocks as they're kind of bottoming out or having some profit taking on it. So if you download my ebook for free, no risk, and read it, if you enjoy it, there's going to be a opportunity to get a discount on another ebook that's going to teach you a fantastic way to try to enter these positions and also hedge risk in your portfolio. So I offer you to check that out. If you have any feedback on any of this stuff, please let me know. But thank you. If you like this content, please like and subscribe to the channel.